Hello everyone, good morning and welcome to my morning report. Charles Appraisals on Wednesday the 25th of March with me, Rich Perry, market analyst at Handtech Markets. European session has started fairly flat actually. Bit of a consolidation coming through these markets in the last sort of 24 hours, and that's basically, I think, been driven by this data from the States, the strong data that we had out yesterday regarding inflation, regarding housing data for the new home sales, and also the manufacturing flash PMI. All showed improvement actually, all showed stronger moves there on the US economy, which helped support the dollar, because I still believe that there is a big data dependency in this dollar trade at the moment, and that helped to sort of arrest some of the decline that we've seen in the dollar. And that has sort of drifted through into equity markets as well. The S&P 500 was down 0.6%, and Asian markets were flat overnight. And at the moment, equity markets in the European trading session is just slightly higher, just very slightly, just around about 0.1%, on both FTSE and on the DAX. Now, in terms of forex trading, we've seen a bit of a slight rise in the euro and sterling today, but pretty much across the board, other than that, the forex majors are basically flat, as is gold. And it's interesting, I will show you the dollar index, and we're just starting now on this dollar index to trade below this 21-day moving average, and that has not really been seen at all through this dollar rally. Only really a little bit in October, you could argue, but if that starts to trade clear of that 21-day moving average, then that could be a sign that this of continued correction. But I see a lot of these forex majors at pivotal levels at the moment, and I'll talk you through them when I get going, and certainly in my chart of the day, and also the euro dollar. There are big pivot levels that we need to be bearing in mind. Now, what we have literally just had out is the German IFO data. Has actually just slightly come in ahead of expectations at 107.9, expected at 107.3, so that should be supportive of the euro and the DAX. And but actually, looking at the reaction, we've just seen the DAX and the euro just slightly off, so that's a little bit of an odd situation, because the IFO data is reflective of the German growth. If I can get the chart up, there we go. The IFO data has been rising in recent months, and has a direct positive correlation to German growth, which obviously Germany being the growth driver of the eurozone. So theoretically, that should be positive for the euro, positive for the DAX. DAX is basically slightly flat on that data, actually, thinking about it just now, still up 0.1%. Anyway, the other data that we've got to look forward to today is the US durable goods data, which durable goods last month, slight improvement on the month, up 0.3%, and the expectation is for again another 0.3% on the adjusted figures, which don't include the transport sector, which is obviously aeroplanes and such like. So they stripped that data out to give the adjusted data, which is much more of an indication on the state of the consumer. And certainly that slight improvement that we've seen last month is expected to continue this month, although we didn't really see a follow through to retail sales last month. So it'd be interesting to see if that is the same thing again this month. That's at 12:30, and then at again at 2:30 we've got the UK time. You've got the US oil stocks. Now that would be a 10th or 11th month in a row of being positive on the inventories. 5.1 million is the expectation, so that would continue that trend, and of increasing inventories, which increasing inventories would be negative for the oil price, and be interesting to see if that just puts a bit of a cap on this these oil price gains that we've seen in the last few days. So that sort of now takes me to my chart of the day, which is euro yen. Now I see euro yen very interestingly. Actually, we've had this recovery actually in the last week and a half. Since that FOMC date, and the move has actually sort of accelerated since the FOMC data, but certainly there is a low that we saw in place at 126.86. But it's interesting because we're now back towards a resistance band around this 131.50 to 132 area. The overhead resistance coming in at 132, and the peaks in the last few days have been 131.50. Very interesting. And you would argue that there's not really a great deal to get too positive about yet on this euro yen. The RSI still struggling to get back above 50, as it did in that rally from late Jan into early Feb, before falling over again. And also the MACD line still not really picking up too demonstrably. The only thing you'd argue is that the stochastics are rising fairly strongly, but that's exactly what they did in January into February as well, and that was before obviously it fell over again. So interestingly enough, we're coming up to this band of 50 pips worth of resistance, 31.50 to 32 figure, and this is the hourly chart, which I'll note you back to euro dollar in a minute, because it looks very similar to euro dollar on the hourly chart. Now we've got this rally, this uptrend intact. It's very positive. It's good for the near-term recovery. However, we have this consolidation in the last couple of days, and that is coming interestingly around a pivot level at 130.40, which seems to be a bit of a support. Now, you could argue also that is a potential top pattern in place. So if you do see that top pattern completed and you see a consistent move below 130.40, that would imply a correction, which would actually give us 131.50 down to 130.40, which was 110 pips. 110 pips projected to the downside is 129.30, which is around about coinciding with this key low in the uptrend, 23rd of March low. The other factor I wanted to point out here is the momentum indicators. They are sort of forming a very slight negative divergence, but you're not yet seeing the hourly RSI falling below these lows. And if you started to see the hourly RSI, that's at 44. So if you started to see the hourly RSI below 44, then perhaps there is something in this as a correction. But at the moment, we're holding on to this pivot level at 130.40, and whilst that is the case, we've got to remain positive, because you're still in this uptrend. The trend is your friend until it breaks, or until it ends. But you're still in this uptrend, so it's a positive move that we're seeing at the moment in the recovery. But as I said, we're still finding peaks around the resistance. That was the peak on the 18th, which was the FOMC spike that the euro got, so 131.50 there, and again yesterday 131.50 was the high. So interesting that is a resistance, and you'll see just underneath also the resistance of the 132 figure level. So some overhead levels to break, but also the fact that we're finding support at that 130.40. So pivot. Interesting pivot levels, sort of slightly sitting on the fence at the moment, but obviously the near-term chart is positive, but you're coming up to some key resistance levels now, and this chart needs to continue. So it'd be very interesting watching this one, I think, today and over the coming days. And that is euro yen. So I wish you good luck in your trading, and I will speak to you later. Thank you.